Now we're going to talk about a company that Bright actually owns in his portfolio. I know this because I can see what is in there. Oaktree. And the first thing I've got to remind you of here, people, is we're talking about Oaktree, not Oak Bay.
Oaktree is the beautiful green tree, you know, Oaktree.
Sounds the same, not even remotely the same.
Yes, so this is a market...
Howard Marks.
Yeah, this is a Howard Marks business, market cap of $7.23 billion, PE ratio of 10. We've got a dividend yield of that one that went up from 6% to 11.3%.
Currently 11.3%. That is astonishing.
Another big pair. This one came into the market in 2013, 2012.
Okay. As far as this one is concerned, similar in a way to Blackstone, fairly similar strategies. Howard Marks is a really notable 70-year-old American who writes fantastic newsletters.
Memos to investors.
That is the thing to note. But let's look and see what Oaktree's share chart looks like over 5 years. Fairly similar.
Yes.
But let's talk about the history here. These guys are best known for, amongst other things, having really gone to town buying assets in 2008, 2009 when everyone else was falling down.
Yes, correct.
And making an absolute killing because, of course, many of those things then came back to value.
So that's when opportunity, comes for these guys, when you can, when, everyone needs sort of capital from them.
There's a fire sale going on.
Yes. And these guys go to the market, to their investors and say, okay, it's time. They knock there, it's time. They raised in January, they raised about $4 billion. They went to raise about $8 billion. The fun thing is that during the Lehman crash.
Hang on, you're talking about now they've been doing this?
No. In 2008.
At that time, yeah.
Yes. So so when Lehman went under, a week after that, they invested $1 billion every week until they ran out of capital.
And that is incredibly brave, because I can tell you back then everyone was running around
for the door.
like a headless chicken. But again, let's just be clear. If you own Oaktree, as you do, you own a piece of the entity at the top, which is where you're co-invested with some of the principals.
Correct.
When they say that they're raising money in order to do some new distressed debt strategy, that's not where the raising is happening. You are the entity earning the fees at the underlying level of the funds are sending their fees upwards.
Correct. So this is a typical asset management firm, if you want to look at it that way. So, like you're saying, as a shareholder, I've got Howard Marks working for me and his team.
Nice.
Yeah, which is very nice. In terms of their track record, so because they specialize in distressed debt only.
Yes, just explain for the viewers at home, what is distressed debt? I mean,
so this is...
Isn't all debt distressed?
No, there's also AAA bonds. So this is fixed income. These are bonds.
Yeah.
So these guys go into, to save the business when it's not doing so well.
So the underlying issuer of the debt is looking very shaky. No one wants the bonds, but of course then you can buy them at a very low price. If they survive, you can make an absolute fortune.
Yes, so Howard Marks calls it fixed income, where the underlying company matters. What they do actually matters, because you want them to be alive. Yeah, so they can be able to pay you back the coupons.
Another interesting thing about them is that they own 20% of Double Line, Jeff Gundlach's firm. So explain again who that guy is.
So Jeff Gundlach was another one of Howard Marks' protégés when they were TCW together. So he hired actually Jeff Gundlach, and when he left TCW to start Oaktree, Gundlach didn't come across. But in 2008, Gundlach was actually kicked out of TCW because he was the head of fixed income, because of lots of ongoing things. They didn't believe in his strategy.
He's not. I mean, Gundlach's got a large ego, you'd have to say.
He's the Trump of asset management, if you want to think of it that way.
Gundlach then goes and starts a firm called Double Line, which has now got like $70 billion worth.
No, it's got 240 billion.
240?
Yeah, billion US dollars.
And Oaktree owns 20% of Double Line, because they were there at the beginning and helped kind of put him in business.
Yes, which is believed that the 6 billion that you're seeing in Oaktree right now, a third of that is actually the stake in Gundlach's business.
That is great. They also have a stake in Alibaba, according to this thing here, and some various other special situations. Assets under management at Oaktree is about $100 billion US dollars. That's the aggregate funds. And then, as you say, what you're really getting is a co-investment. Okay,
and
we got to go hot or not?
Yeah, their track record is for their 17th distressed debt fund is 19% in dollars. So yeah, I'm hot on this one.
You're hot on this one, and you are of the view that you'll either get your money back in the form of capital gains on the share as well as these regular distributions.
So it's going to be big distributions, and in the next big, sort of market shakedown, that's when this will come actually to the market, and you'll see their value appreciate somewhat.
Look, the fact of the matter is there's always opportunity. The financial environment in those global markets is so deep and there's so much going on. There's always someone failing and, you know, opportunity to strike.
Yeah.
Excellent. So you're hot on that one. Okay, well, I'm going to give you the benefit of the doubt and say you wouldn't have bought them if they weren't hot, so we'll go hot on Oaktree as well.